U.S. economic growth slows to 1.1% while inflation accelerates. Inventories dented GDP, tempering surge in consumer spending. Fed's preferred underlying price gauge rose more than forecast. Welcome to Long Branch News, your daily source for the latest business news and trends from around the world. U.S. economic growth slowed in the first quarter by more than expected as tepid business investment and a pullback in inventories tempered a pickup in consumer spending. Gross domestic product rose at a 1.1% annualized rate on the back of the strongest consumer spending in nearly 2 years, the Commerce Department's initial estimate showed Thursday. The Federal Reserve's preferred underlying inflation metric accelerated to a one-year high. The 3.7% increase in consumer spending reflected gains in both goods and services, including a surge in purchases of motor vehicles. Business investment in equipment posted the biggest drop since the start of the pandemic, and inventories subtracted the most from GDP in 2 years. The figures illustrate economic growth that is gradually downshifting under the weight of Fed interest rate hikes and elevated inflation. While the economy bounded ahead at the start of the year, helped in part by unseasonably warm weather, households and businesses pulled back on spending as the quarter progressed. The outlook depends largely on the resiliency of the job market. Low unemployment and persistent wage gains have so far allowed consumers to weather high inflation and keep spending. Follow the reaction in real time here on Bloomberg's TOP Live blog. The Personal Consumption Expenditures Price Index grew at a 4.2% annualized pace in the January to March period. Excluding food and energy, the index rose 4.9%, faster than forecast and the most in a year. March data will be released Friday. Services inflation remained hot while prices of non-durable goods accelerated. The inflation and consumer spending figures likely keep the Fed on track to raise interest rates by a 0.25 percentage point next week. First Republic Bank's continuing struggles, however, do raise the possibility that the central bank could pause. Inflation remains stubborn, and along with the continued strength in the labor market, it should keep the Fed on pace for a May and potentially a June rate hike, said Cliff Hodge of Cornerstone Wealth. The median projection in a Bloomberg survey of economists called for 1.9% GDP growth and a 4% annualized gain in personal consumption. The S&P 500 opened higher, Treasury yields jumped and the dollar strengthened after the release. Separate data out Thursday showed applications for unemployment benefits fell for the first time in 3 weeks. Continuing claims, which can offer insight into how quickly out-of-work Americans are able to find a new job, were largely unchanged. Headwinds ahead. The economic slowdown is expected to be more evident in the second quarter, with economists forecasting GDP to grow at a stall-speed pace of 0.2%. The Fed's April Beige Book survey of regional business contacts indicated the same, with policymakers describing economic activity as little changed and consumer spending as flat to down slightly. While a recession isn't assured, many economists, including those at the Fed, expect the cumulative effect of monetary tightening, a retrenchment in business investment, a slowdown in consumer spending and tightening credit conditions to ultimately tip the economy into a downturn. Recent data signal that soft economic growth continues into the second quarter, said Kathy Bose-Jancic, chief economist at Nationwide. Meanwhile, inflation, especially at the core services level, remains elevated and sticky, an unfavorable mix of slower growth but still high inflation. The GDP data showed services spending rose at a 2.3% annualized rate, led by healthcare and restaurants and hotels. Outlays on goods increased at a 6.5% rate, the most in nearly 2 years. Inflation-adjusted spending data for March, and any revisions to prior months, will also be released Friday. We hope you found the latest business news and trends informative and insightful. If you enjoyed this video, don't forget to hit the like button and share it with your friends and colleagues. And if you haven't already, make sure to hit that subscribe button and turn on notifications so you never miss a